Good evening, everyone. I'm so excited tonight. My name is Angela Fullwood, and I am the supervisor for family and community engagement, and I have my entire team with me here tonight. Dr. Felita Lewis, who is the Executive Director of Family and Community Engagement, is with us, and also Mercedes Brown. She is the District Resource Teacher for Family and Community Engagement, otherwise known as FACE. That's how you all can remember us. And because we're family and community engagement, our purpose is to really empower our parents and increase our engagement with parents, but not only with the families, but with the community. And today we have one of our greatest community assets, Suncoast Credit Union. We love Suncoast Credit Union. Oh, I love Suncoast Credit Union. I've been a member since I was probably like 5 years old when it was Suncoast Schools Federal Credit Union. But anyway, we have with us Rihanna Ray. She is the Youth Outreach Specialist there. And also with her is Kemi Ashima, who is the Lending Specialist. So with that, you will hear a wealth of information, the basic of personal finance, something that we all need in our lives, the basic of personal finance. So for right now, I'm going to turn it over to Rihanna. Rihanna, take it away, and thank you for being with us.
Awesome. Well, thank you so much, Miss Angela. My name is Rhiannon Ray, and I am with Suncoast Credit Union as a youth outreach specialist. So just to let you know a little bit about me before we jump right into the presentation, Suncoast is always here for the schools. We're always out here presenting. So I would like to say that I have literally the best job in the world because I get to go out to different schools, different nonprofits across the state and just teach free financial education. So whether you at one point in your life wish that you had financial education, or even now as you're looking at how to teach your kids about financial education, that's really what we're here for. So I am being joined by Kemi, and Kemi is on the call. If you can say hi.
Hi, guys.
Awesome. And there we go. The camera has loaded. So I will pass it over to her to tell us about herself and get us started here.
Good afternoon, families. My name is Kimmy. As she said, I am the lending department. I know Rihanna says she has the best part of the job of Suncoast, but I have to disagree with that. I deal with my people. I deal with people on the phone all day, so I get to hear. And in lending, I handle your vehicle loans, I do your credit cards, personal loans. So I hear the everyday living, as well as I want to say that I help with the everyday living because everybody needs a car, credit cards, and things of that nature. So I love the fact that I get to handle it on this front basis. I've been with the credit union for about 6 years. I hope that this basic personal finance webinar really gives everyone a starting point with what they need to help build their personal finance. So I hope you guys have a great time tonight. So we're going to jump right into it. What I want you guys to do first, if you have pen and paper, which I hope you do, I want you to first write down maybe 2 or 3 things that you think you want to gather from today. Let's try that first. And once we get those 3 things written down, make sure, like she said, we have a message box. So make sure you add your questions so that we can address them and get you moving forward. So when it comes to the elements of personal finance, we have money management, we have credit use, debit repayment, goal development, and credit report monitoring, saving, investing, tax planning, retirement planning, and insurance coverage. I'm going to give you guys a basics on each one of those so where we can kind of dive into it just a little bit, okay?
Awesome. Yeah, so don't get overwhelmed at all by how many topics are being covered because it's super light and we're just going to really cover those basics.
So when you think of personal finance, they consist of all of those categories we just read off. So it's a lot, like she said, to consume. But I want you guys to understand the first thing when you do get overwhelmed is overcoming those obstacles. So we're going to give you what people sometimes get stuck on. So the first thing that is giving you is a lack of direction. It comes from having these particular goals. This is why I want you guys to write down 3 things that you're thinking that you're wanting to know and gather from here. So where then it doesn't give you the lack of direction. You know, you need these things to cover on and you can move forward from it. Debit, I feel like it's something that people hear, debt, and they get scared of it and they're like, oh, debt, debt, debt. Debt can be overwhelming, but it can also be something that once you see it, you can then tackle it and you can see what needs to be done to overcome it. So that's a good thing as well. Procrastination, it is natural. We all do it, believe me. I urge you though to, when you start to feel that, to fight that off and to move forward into those same things that you've already written down that you want to actually move forward and to kill it, end it, dead it, or to learn from it. Another thing, inflation. We are in this now. So I know we are all feeling inflation right now. Cost of living is going up. Everything is going up right now. Don't allow that to run you. Don't allow it to create the procrastination or the debt that you have. Go back to those. When I say go back to it, I want you to go back to those things to where you've written down to give you the direction that you need to move forward. So don't allow what you see to control you. Remember what you know. That's why it's important that what you know, can't nobody take that away from you.
Correct. And as we all have experienced maybe ourselves in life, it's kind of that learning from our mistakes piece. So sometimes when we have maybe made a mistake in the past, it prohibits us from wanting to move forward. And that's really what Kemi means by us identifying our clear goals so that we can move forward in each direction, despite maybe a lack of direction in the past. So now we are going to discuss money management. So money management is really, there's a lot of elements to that. So whether it involves tracking your income and your expenses, so the money that's coming in, the money that's going out, creating plans, or even looking at those numbers like net worth. So now, Kemi, I'll let you take it away.
Okay. So cash flow is one thing I know that everybody is focusing on when it comes to money management. What comes in, what goes out. That's one thing. That's how our cash flow goes. Creating that spending plan that reflects your goals. This is why writing things down, keeping things in some type of order of how you want to, how you need to pay certain things is very, very important. Monitoring, I know right now we're in a digital world, so your phones, my phone's my number one go-to. If I can write it down, or if I keep my receipts, I know that's kind of difficult for us right now, but keeping your receipts and writing things down, anything to help build a good habit will be a good way to start with that. Another one they have here is net worth, assets and liabilities. I know sometimes we get confused with assets and liabilities because of we think of every day what we need is an asset, and actually not really. So it's basically taking the time to decipher what an asset is and what a liability is for you. Certain things that we can't do without would be, your everyday living things, your rent, your water, those great things. Your liabilities, little do we know, a vehicle is actually a liability, but it's something that we actually need. So it helps us then put the network together of the importance of what's being taken care of, what does need to get taken care of, and what's not needed. I hope that makes sense for you guys.
Yes. So really the net worth is just that equation of what do you own that has value, that appreciates over time, like a home or like land, different things like that. What do you owe on? What are your liabilities that would maybe prohibit you from building that wealth piece, such as a car that is a depreciating asset, which means that once you drive off the lot, it's worth less money. And then that equals your net worth. So for example, a lot of people at this starting place, when you're analyzing, you'll realize that you're at a negative net worth. And then your goal is to build assets so that you can begin to build that generational wealth. So we always like to tell the youth money management is just super important. And some things that I just give them as a tip that you can give your student as a tip as well is just starting to really track their spending. So a lot of times the kids tell me like, hey, I don't have a job yet, so why should I be tracking my spending? Well, the habits that you create today are habits that typically go with you into the future. So with their work ethic or with their money, it's really important for them to identify their long-term goals. So if your student is talking about college or is talking about wanting to be a business owner, having them exhibit these behaviors today. So whether it's tracking on an app, whether with their allowance money, maybe they have a side hustle, encouraging them to actually show you a plan. While they might not have bills right now, they do probably have shoes that they want, a new video game that they want. Maybe they want to save up to go to a school event later in the year. And those are things that they could show you on their budget.
Having a budget is key. All right, credit. Credit is something that we have to, it's practical for us. You know, we use it every day. It's a convenient tool. I know, to give a good example with credit, I'd like to think of it as people who travel. You know, you don't want to carry large amounts of cash on you, because then that's something you have to keep track of, or even in everyday life, having to keep track of it, large amounts of money. But when you have a credit card where you can maintain and sustain that credit, it makes it helps build at one point, but also it gives you an option to help record and keep things going. When it comes to credit, everybody keep in mind of your interest rates, finance charges, your annual fees and penalties. All of those things are really, really important when it comes to you obtaining credit, getting credit. You want to think of those things of what the interest rate consists of, and you know, what finance charges do they have? Ask those type of questions. Those type of things are really good to ask whenever you're trying to obtain some type of credit. Do they have any annual fees? What the penalties are? What it looks like? How much is it? Because once you get that part down, it helps you with overspending, and it helps you with also with maintaining and sustaining that credit as you continue to build it. So always ask questions when it comes to credit. As well as it helps you build it the way it's comfortable for you now that you have the tools and now that you know what they're going to be charging.
Yes, yes. And another just tip, where maybe if you have a high schooler or someone else, a young adult in your house who's kind of looking for that credit building piece, is we always tell the students, be sure that you're only charging what you can afford to pay back this month. So a great example of that is whether it's maybe a coffee from the coffee shop that they had the cash anyway, but they use their credit card and then they pay it off right away, so that interest isn't applied. That helps them build credit. That helps you as well. Just looking at credit as more of a vehicle to get you where you would like to go, but not as a safety line. So another example is subscriptions. That's something that we all typically have at this point, one way or another. So putting that subscription on the credit card, but going ahead and paying it right off and not having interest be applied to the next month.
That's good. All right, debt. They say you have good debt, and then of course there's bad debt. Let's break that up into categories. So you have your good debt, which I would consider that as will be your assets. So that would be a home. A home is good debt, because at the end of the day, that's an asset for you. It can gain any type of not liability, but it can gain the funds back into it of what you put into it, if that makes sense. Bad debt would be something that will be your liabilities. So when I think of liabilities, I think of overdoing liabilities. So everyone needs clothes, everyone needs to eat, but there's a way of doing it a different way. Eating out every day becomes a liability. Buying clothes that you may not need as a for a right now situation can create that type of debt, because now you have to continue to use that money to eat out every night, instead of, hey, let's just get these groceries, let's cook this meal and it can last a couple days, versus the $7, $8 meal. Because remember, we're everything is going up. So you're spending $10 on meals for a whole family when you can cook something and make something last a little bit longer. So that's how I would decipher good debt versus bad debt. It's something that I have to maintain and sustain to where it becomes a larger amount of money I have to spend out, or this is something to where I can eventually turn into an asset for myself. That's a good way to decipher good debt and bad.
Yes. And to add on to that, it's kind of what will end up having value, maybe thinking 5 years, 10 years from now. So again, when we talked about the net worth equation and the assets, that is, again, your home, your land, just those items of value that you can look down and maybe even pass this item down from generation to generation because it has value. While your liability is those things that you just go ahead and throw it on the card and pay it off later, sort of things like your food or your clothes and things like that. Great.
All right, goal development. An action plan is very, very important. I love the way this breaks it down into 3 ways of how to create different type of action plans. You have a short term, 12 months or fewer, middle term, a year or 3, or your long term, 3 years or more. This keeps you going. So your typical short term would be, vacations, electronics, things that doesn't take a lot of time to create or to accumulate or to gather. That's a good way to create a typical short term. Put it in a savings account, put it to where you have an appropriate place for it to go and you can label it short term. I need this for the next year before the kids, for me, it's the kids are going to start, the weather's going to change. So now it's like I need to plan for warm clothes. So let me go ahead and put this away to where it creates that short term goal for me for at this moment. That'll be my 12 years or fewer. And then for your midterm, that can be something that you're looking to get done the next 3 years. So whether it's you're looking at getting a home or getting another vehicle or something to where it's going to take you some time to accumulate the funds, do it the same way you did your short term. You'll write it down, you'll then put it away, and you'll have a designated place for you to go to keep that money up to where you can put that down payment down or anything of that nature that you're trying to get to. And then those lucky long term for our parents that are on here. I know we have some elementary, there are middle school, there are high school. So I know college is way up there, but you can never, there's no time to start. There's always a great time to start when it comes to that. And even with their further education, whether they choose to go to a different middle school or high school, what the things that they may need to go forward, that will be your long-term goals. What can you do to where it will help you put you in a place to where you can create an additional savings for that? A retirement, we don't want to work forever. I know I don't. So create that type of mindset of, okay, I want to be able to retire at this age. So what is it that I can do now to where I can pay off this car or pay off this credit card or pay off this so where I can live the way I would like to live once his kids are out of my house. That's the way I think of it as. So that's a good way to create that long-term goal. And it makes you excited to then see when you start to do your short-term and midterm, it's kind of like that list where they say you check it off and you get excited because you've done something and now you get to move on to the next thing. And you create this type of development for yourself. You can use that for anything in life, if you ask me.
Right. So one thing that I always tell the youth in the presentations that you can kind of take home to your students is that idea of specific goals. So I always say when New Year comes around, what's one thing that we hear? We hear that you want to get healthy, you want to get fit. Well, from person to person, I'm sure if we were able to unmute everybody on this call, we would all have a different definition of what healthy and what fit means. So it's hard to track. It's hard to know if you ever really hit that goal. Versus saying, my goal is to be able to walk a mile in 10 minutes, and my goal is to cook from home 3 times a week. Now we'll know if next week I have walked a mile in 30 minutes and I haven't cooked at all, I know I'm not meeting my goal. Versus if I walked a mile in 7 minutes and I cooked 5 meals from home, then I know I'm exceeding my goal. This is super important for your youth to understand this so that they can really praise themselves whenever there is an accomplishment that they achieve. And then also with what you're comfortable with exuding to them, showing them, hey, look, mom, dad, grandma, grandpa, we made our goal. We had this goal to go on a family trip to Disney, and that involved us putting aside this much money for this many months so that we could all come together as a family. Those things are great to show the youth, to know that it's not just you who's working on a goal, I'm working on a goal as well. And then that just becomes that mathematical equation of, you take that amount that it takes to achieve your goal and then divide it by the amount of time until your goal. So you know how much you can be putting away monthly. So you know if you're meeting or exceeding your goal.
Credit report monitoring. Okay, so I do recommend, of course, with the credit reports, there's three. You have your Experian, your TransUnion, your Equifax. Those are your three those three credit reports that you can look up. Do it once a year. Freecreditreporting.com. Once a year, you can pull up all three of your scores. You can take a look of what's reporting, and then it helps you to then take a look and see what's correct and what's not correct, what's on there and what's not on there. It's important to do that, so where you can dispute what needs to be on there, or it sometimes, when, you know, a lot of people use Credit Karma. When they use Credit Karma, it may give you a way to like maybe elevate from where you're at, or give you an option of what needs to be done. But sometimes with Credit Karma, it doesn't give you everything that you need to see. It will just give you what it pulled and then give you an option. If you want to see it yourself, that's your credit. Go to that website once a year. It's for free. Pull it up, see what's on there, see what shouldn't be on there. Check it annually. So where it gives you that type of it gives you that control. I like to say control. It gives me that control over what's mine. What else with the credit reporting you can look out for? It helps with fraudulent activity as well. It's not just as a control. Fraudulent things happen all the time, and you don't know, unfortunately, when it comes to credit being, credit fraudulent, you don't know until it actually happens to you. So if you stay on top of it once a year, looking at it, reviewing it, it's hard for that to happen, kind of slip through your fingers before it's too late.
Correct. And then when we teach credit reports to students, the way that we like to explain it is that it's kind of like a report card for how financial institutions, whether it's banks or credit unions, see your lending habits and responsibility. So I explain it in this way with credit. I say, imagine that you have 3 friends. There is one friend who you've known for years. They've asked to borrow small amounts and they've paid it back. And now they're asking to borrow $20 and they've paid it back. And they're always very consistent with that. So pause in that story. Then there's a second friend and they don't pay things back. You might have been friends with them a while, but they borrow a little bit. They take a while to pay it back until the point where sometimes they're just not paying you at all. Then you have a third friend that you just met yesterday and they're super cool and you think that you're going to hang out with them a lot, but you just don't know them that well. So now imagine all 3 of these friends ask to borrow $200. Who would you trust most? Obviously that first friend, right? And then the second friend, you might not want to give the money. And the third friend, you just don't really know them to know if they would pay it back. So the first friend is like the friend with good credit. So the one who pays you back, has all that history there. Second friend is like the one with bad credit, who, isn't paying things back. But then the third friend is like a friend with no credit. So that's that teenager maybe who's just trying to get their first car or different things like that. So that's a good way to explain it. Of course, there's interest rates that come into play as well, that we will teach them as time goes on. But just making sure that monitoring your credit report is something that you prioritize.
That's good. Savings. So when it comes to savings, it's very important, of course, when it comes to savings to have that established. When it comes to savings, even with everyday life, debt, everything that you're having, the goals that you guys have written down, everything that you all have to maintain and sustain, you still have to leave a bucket in there for savings. Saving is a good habit to create for yourself. The way to do it is maybe with direct deposit. I don't know if you guys have, if you guys don't think with this already, which you should. If you have a particular savings account to where only $25 goes to that savings account, where you can't touch it, that creates that saving basis for you. It's okay to have a couple of savings accounts, to where a certain amount of money accumulates after a while. If you have any places to where where you work, where you receive bonuses or any other additional money that you receive that you can put away, it's always important. I know people who watch, and I've never done the Dave Ramsey, his whole thing when it comes to savings, but he talks about the 3 to 6 month savings of having just for emergencies. And that's always important to have because we have no control over those. It just happens. So if you create that basis of having that savings, to whether that's that $25 a year, and let's say the washer goes out, now you have that certain amount of money you may be able to put up. You may not have all of it, but you have something to give towards it. And it's not such of a financial burden on you because there's something put away to put towards it. So just creating that habit of where to put the money to where you can't touch it, and creating that continuous basis for yourself will help you with savings.
Yes, yes. And just from the perspective of teaching this to your students, or if you are a student on this call, making sure that you also reiterate to them the importance of paying yourself first. So whether that is through an allowance, or maybe they mow lawns, or maybe they sell candy bars, those are things that you'll want them to get in the habit of saving at least 10% of whatever's coming into their hands, especially at this phase where they don't have any bills yet. Because that builds that habit. Also, they could use that savings for bigger things that come up in their life, or maybe when they want to get a down payment for their car. But it's a very simple equation that I'm always like, okay, so for every $10, it's $1. So $20, $2, $33, so on and so forth, that way. So then the emergency account, just from my perspective also with financial coaching for adults, don't be daunted by the 3 to 6 months. That is the recommended one that a lot of financial professionals will tell you. But a lot of us are really treading water, right? We're trying to just keep the bills paid, and thinking of having that much money could be kind of intimidating. So I want you to be encouraged and just know that you can figure out what works for your family. So, look back at the past year and see what has constituted as an emergency in your household, because that's going to go different from person to person. Maybe it's a medical bill, maybe it's an AC issue. These are all going to be different from person to person, but figure out that dollar amount that would get you and your family just at arm's length away from an emergency, so that you can keep moving towards your goals. So that for you, it might be $500. For you, it might be $1,000. But don't let the fear of this big number make you procrastinate from even just getting the smaller goals started.
That's good. And that's how I feel about investing. Investing is something I feel like once you created those goals for yourself, when it comes to your savings and it comes to creating that, knowing what you have as a liability and asset, and once you create that type of habit for yourself and you've gone pretty far within your goals, investing is something that should be looked at. It should be something to where you invest into, because it builds wealth. That's the difference between investing. It builds that long-term wealth for you and for your family. There's different ways of how you can do it. You can invest set amounts of money on a regular basis, regardless of whether it's a stock market that's doing it, but you can create that for yourself. So it's something that you should keep in mind, keep it in the back of your mind, because hey, this is going to build a wealth I'm handling right now, maybe 10 years from now, but to consider, your children's children and so forth, or bigger things you want to do, that requires investing.
Right. And just since this is kind of just, a surface level dive into investing, one thing that's really important to consider while looking at investing is your risk tolerance. So what that means is that there is a level of risk for every type of investment. So you want to make sure that you're only investing amounts that you're okay with the risk of losing or the risk of depreciation, the different risks. So that's where it's really important to work with an investment professional. There are a bunch of methods for you to invest yourself, but there's also lower risk investments, which we're going to talk about through through retirement investing and things like that have a lot more tolerable risk factors. So that's important. And then just from the perspective of how to teach your youth about investing is I like to explain this as a lemonade stand. So imagine that you want to have a lemonade stand. Well, you can't just get started right away. You have to buy the supplies to start selling that lemonade. So what do you need? And I typically ask the kids to list out the things. Lemons, you need water, you need sugar, you need the pitcher and some cups and a thing to stir it with. So maybe you spent $10 to get all of your supplies for the lemonade, but now you sell your lemonade glasses for $1 a glass at the yard sale and maybe make $25. Well, now you've just profited $15 off your investment of $10. So you can kind of teach your kids in a way that works for you. But that's just a general overview of how you can explain the world of investing just at a starting point, because I know kids are hearing a lot of that now, especially with the different apps and stuff out there.
Tax planning. So when it comes to this, I would like for everyone who's working, or even if you're self-employed, especially for my people who are working with employers, try to speak to your employer. Find any type of benefit that they have that's pre-taxed and that you can invest into that. That is one way that helps with, like they mentioned, retirement plans, 401ks, your IRAs. Ask your employers, do they have these options? Ask them if it's pre-tax. Have someone kind of go through that to see what it looks like through your employer and how you can start investing into that as well. It speaks a little bit about, go ahead, I'll let you take over on that one.
I was just saying that for these particular slides, we talked before about on that first slide with all these bullet points of what we're going to talk about. And what I want you to rest easy knowing is that there are professionals for each of these things. So for example, the money management piece, there are financial coaches out there who can work with you on your plan and your goal setting and tracking your money. That's one realm. Then for investments, there's financial advisors who are licensed to sell these products and to give you the information and take a lot of tests that ensure that they have all of those qualifications to say so. And then tax planning, there are tax professionals. So for example, taxes as one thing for me that where I could get super stressed out trying to think about it, trying to plan for it. So what I do in my budget is set aside money each month towards taxes and the event that I do owe, or just in general to be able to hire someone to help me with my taxes if I have some special things, especially if you're maybe an entrepreneur or have employees or have a side hustle. Those are things where you might want to look into hiring someone and knowing that they can handle all this kind of stressful stuff and talk with you about some of your options for the following years. That kind of segues into the retirement. Same thing. A lot of your HR benefits, if you're at a maybe organization, there's people who are in place to kind of talk with you about the differences in these plans along with your investment professionals. So 401k, just the best way to explain it is it's a retirement account There's also 403B, also retirement account. All the ones on here are retirement. Now the differences are in how they're taxed. So some of these are taxed up front. Some of these are taxed at the end when you withdraw the money. That varies from product to product. But one of the best ways for you to start your investing journey, if you haven't already, is investing into your company's retirement plan if they have one. A lot of companies even offer an employer match. So that's where they match dollar for dollar the amount that you're putting in up to a certain percentage. So it's literally like free money on the table towards your retirement. So it's super important for you to take care of that. There are different type of plans. If you're self-employed, that is something that you would want to talk through and look at, because retirement really is feasible. It seems hard, but with the proper planning and the proper team kind of in place to help walk you through it, it's totally possible if that's a dream of yours.
Insurance coverage. So it's very important to have the right insurance in the proper places for yourself. So you have life, medical, your home, any long-term disability, anytime short-term disability. I would recommend also with these type of things is getting with your employer and see what they do offer. I've noticed when it comes to insurance, if you can get it out of my check before I see it, it's more easily for me to keep up with it and pay on it and have it just for those type of emergencies. Health insurance is important, of course, medical expenses, things to where you have illnesses that come up, pregnancies. When it comes to your life insurance, of course, when it comes to death benefits, beneficiaries, having these type of things set up properly. So where when you do have to meet this, it's already in the process because you've already created to have this type of plan pulled out, and then you put your beneficiaries down when it comes to your life insurance or your medical or anything of that nature, even for your home, your car. Those things are good to have fully insured. So where if something happens, you know, either you can get another one or something can be set in place to help you. That's what insurance is really for. So really have that in mind. And when it comes to having insurance, life, medical, and your assets, long-term and definitely short-term disability is very, very important to have. And ask questions, see if your employer has it, if there's any companies that can have it so where they can pull it out and see how that works for you within your budget. But these are good things to cover for you.
Right. And just making sure that you truly do plan ahead. None of us ever expect an emergency or something unexpected to happen to us until it does. So just even as you're looking at family planning, or if you're looking at just different things, different potential illnesses that run in your family, you need to make sure that you go ahead and get these proper insurances in place before, because a lot of insurances have clauses about you can't just switch to a better policy when something's already happened. So you want to make sure that you really are thinking through that. And then as far as life insurance goes, it's truly needed for everybody. So you might be thinking, hey, I'm a stay-at-home family member and I'm not bringing in an income. But even though you're not bringing in an income, you are bringing in significant value to the home, because if you weren't there, you might need childcare expenses. You would need someone who could provide meals. You would need maybe a house, someone to help clean up the house. Like those are things that are crucial to your role too, and you need life insurance as well. So just be sure to always think, unfortunately, with insurance in the worst case scenario, and make sure that you're properly covered. So final thoughts. Really, the point of this presentation is just that you can set those realistic goals, making sure that we're tracking them and that we're actually progressing or reevaluating them too, because sometimes goals change. You'll ask your youth too, like they might want to go to this certain college, and then suddenly they're like, actually, you know what? I think I want to stay here if I'm able to and go to community college and save up some money. That's okay. They still have their money. They can just readdress their goal to account for those things. embracing delayed gratification. We live in a here and now, I want it now, I seen it, I want it now sort of society, and credit cards have really been the vehicle to get those things super quickly, but at the expense of our financial health and at the expense of our financial peace. So you want to be sure that you embrace that delayed gratification and that you encourage that for your kids too, because reality is they're watching us. So if they see that the adult in their house is really working towards a goal and then celebrating when they achieve it, celebrating when you get to go on vacation, celebrating that new car or whatever as a family, then they'll know, hey, I can't just blink and have everything I want right when I want it. I have to save up for it. And then I know that the people in my house will celebrate me as well. Living within your means, that goes again with the whole not spending money that you don't have. It sounds simple, but unfortunately it's a mindset that even I was a victim of in the start of my journey towards having generational wealth and building up a good foundation for my family. But you just again get stars in your eyes and want things now, and you forget to just make sure your bills are less than how much you make, not more than how much you make, or else you'll live in a kind of constant state of stress. That goes with don't spend everything you make. You want to have that savings. You want to be able to give when people would like you to give. You want to be able to donate. You want to be able to support that fundraiser, support that cause. But if you're living check to check, it can put a lot of stress and burden on you and your health. Being patient, that just goes back to all of the other things that we've talked about, making sure that you're patient in this journey and that you're patient with yourself. Like if your goal is to be debt free, if your goal is to have a chunk of change aside for a rainy day, if your goal is to send your kid to college, you need to be patient because there's going to be times where you fail along the way. I've failed trillions of times and I know that I'll continue to fail. But one thing about failure is that it's only pointless if you don't choose to learn from it. And then lastly, monitor your investments, monitor your checking account, monitor your money. Even when you do hire these professionals, do work with maybe these free resources that will help you out. Still make sure that you're very hands-on and make sure that you're working with people who truly just have that that will and guidance to educate you, that they're not just talking down to you or whatever, that they're conversing with you, and that if you have a question that it's getting answered. Because at the end of the day, any financial professional who's worth trusting is one who is willing to teach you, because this is your life and your money and your choice. And Kemi, did you have any last parts to say before we hit on our Q&A portion?
Give yourself enough grace. Give yourself enough grace when you start this. And you can start now. I don't care how far you think you are when it comes to debt, when it comes to not investing, when it comes to not even having a goal or any plans. It starts now. It starts right now. Even for your little people, it starts right now. Create something, and it doesn't have to be extravagant goals. It can be something very little that you want to accomplish. And once you build that confidence for yourself, sky's the limit. Don't be scared to ask questions. Asking questions is the best thing you can do. And when I speak to my members and they're like, oh, I hope I don't sound dumb. There's no such thing as a dumb question because you don't know. So ask every single question. I don't care how it comes out of your mouth or how it sounds. If you can say, I don't really know how to say this, say it anyway. Because that's how you gain the encouragement that you need to know that, hey, I can tackle this. I can handle this. I can run this. This is mine. This is what I can do. This is your money. So just keep that in mind when you're creating these goals for yourself, when you're writing down what you want to accomplish, when you invite your kids to start doing it and have them create their little goals and what they're wanting to do, and you're able to set them up to give them a step-by-step because we've given it to you. So have a great time with it.
Awesome. Thank you very much. So now we're ready for any Q&A if anything did come through.
There was, I feel like you all did a very thorough job. There was only one question. I feel like you answered it. They just wanted to know what the website was.
Yes.
That was truly amazing. information. I loved it. I loved it. I loved it. And, it's never too late to get your finances in order. You're never too old. You're never too young. It's just the procrastination for some of us have been there. And just from me, from experience, I was a procrastinator, and I had the belief system, just that screen, that slide that you just had, really thinking that, okay, I make all this money, I want to enjoy all of it. So I was like spending every penny. But then I got myself caught up into living from paycheck to paycheck, and that just didn't work. My husband was more of a saver. I was more of a spender. And, we kind of clashed when it came to that. But we took the Dave Ramsey course, you referred to him, and it really helped me. All of this information that you're going over now really helped me to see differently. And I was in my 40s when that happened. And so to me, it was awesome. And I'm so excited. I want all the parents to know before you leave that this is not the last one. Suncoast is coming back to us. We have 3 more sessions. So make sure you're registered. We have one called The Psychology of Spending, 10 Steps to Financial Success, and Understanding Credit. What is it? Understanding Credit. So make sure you're with us back in those sessions, because these ladies are awesome. They have great energy. They have great information. We got to go higher financially. We all got to go higher. Take it from the experts. And a bank that is willing. Kimmy is a loan. She is a loan officer, and she wants to help you.
I do. I see it every day.
Yes.
Let's do it. You got it. You got it. You started here. So don't let this be your stopping point. Keep going.
Yes. And somebody did ask if they can have the slide. So it's my understanding that this whole presentation is recorded. So you'll be able to go back and pause and watch it at your convenience on any of these slides.
Yes, we post the web, our YouTube channel right there. Click on it, subscribe to the channel. This has been recorded, and it will be posted for you to view as many times as you would like. And again, they will be back. Are there any final words, any more questions, or any, if not, do you have any final words for us?
Yeah, just again, want to encourage you all, thank you for being on here, but get that conversation going. I think so much of the reason why we maybe don't talk about finances with our kids or with our family is because of the stress component, or maybe even the shame component. And don't let that stop you. There's so many times where the young people in our lives actually can learn from our mistakes, and where we can be open with them at age appropriate levels. We don't want to create any anxiety or stress in their world, but we do want them to know that, we're people and that we can mess up, but that we're making steps ourselves to change the future for our family. So that's all I have to say. Kimmy?
Same thing. Keep going, keep pushing. I know we have also with the credit union, we have a company that can do some financial education, and some of it's actually free. It's called balancepro.org. So you guys can go on that website. I have a number. There's a number there. We'll drop it in the chat as well. So where you can go call them, see what they can offer you for free, what type of services. But just like Rihanna told you guys, make sure that even with the free services that they're giving you, make sure it makes sense to you. Make sure that it's something that you can comprehend and understand and use going forward. You guys, don't be scared of it.
Yes. And then I forgot to mention this, so I want to mention this really quick. Just the key differences between a bank and a credit union, just because we keep saying Suncoast Credit Union. But really the biggest difference is that we are a not-for-profit financial institution. So you can typically see lower interest rates on our loans. You can see that you're a part owner of the credit union through being a member. So we've never called anybody a customer, because you're not a customer, you're a part owner of the credit union. And on our website, suncoastcreditunion.com, you can find all the information about being a member and the credit union difference. And I promise that is all from us. So we'll turn it right back over to the FACE team.
Thank you, Dr. Lewis. Do you have any parting words?
Good evening. I do. And thank you, ladies from Suncoast. I tell you, I always say that we cannot do this very important work without our community partners in education. And I even learned some things myself tonight. I also put in the chat that there's another offering that we will have from Suncoast, and I want to make sure we don't miss that one, but it is how to raise a money smart kid. So we do have that one that's becoming available. And I wanted to let all of our participants know that we will also be offering some of our sessions in Spanish, because we do have a desire and we want to put some intentionality around our Spanish speaking families. So I really want to say thank you to Suncoast for also helping to lift and lead some of that work as well. I also want to just piggyback on what Kimmy stated when she said start now. It's never too late to start, even with the smallest amount. I remember when I started teaching almost 30 years ago. And there was someone, actually he was an assistant superintendent who encouraged many of us to start even with $25, setting it aside. And you'll be amazed at how quickly that bank account can grow. So I was happy to hear her say that. But I will say to the parents and the participants, because I understand there's some who are not parents and they may be just community members, that if there is a desire for us to expand this work for you all, we do have a number of other sessions that Suncoast has indicated to us that they are willing to facilitate. We just went through and selected what we thought would be really 5 hot topic items. But if there is a desire and a need for us to expand our offerings to service you, we can certainly work with Suncoast Credit Union to make sure that we're expanding that offering for financial literacy for our families and our community members. So I just wanted to close with those thoughts, and thank you, Ms. Fullwood, for always doing a phenomenal job facilitating the Power Hour, and certainly our community partners in education, Suncoast. We could not do this very important work without you. And then to the participants, thank you for carving out time this evening to be with us, because this is a service for you. It is a free parent education opportunity for you and community members to join us to become a little bit more informed. And I just wanted to say thank you to everyone, and thank you, Ms. Fullwood, for your leadership.
All right, well, thank you. With that, I want to say good night to everyone. And until we meet again, see you next time with our Power Hour.